Welcome to All About Money on HKIBC. I'm Chloe Fong. Wall Street rallied after U.S. President Joe Biden and House Speaker Kevin McCarthy reached a deal on raising the debt ceiling. But Asian equities slid early this week amid caution about a wobbling economic recovery in China, accompanied by a weaker yuan and intensifying geopolitical tensions. The AI sector, meanwhile, rocketed again, boosted by Nvidia's new products and services. So what do we make of these various pieces of the jigsaw? Let's find out from James Wong, Chief Executive of Cathaysia Securities. So James, welcome to our show.
Thank you for having me, Chloe.
First thing first, let's talk about the Biden-McCarthy deal. Now, it is a persuasion time as we record this episode because the White House and the Republican congressional leaders gear up lobbying campaigns to win the approval for the possible deal. Backers of the deal have only 1 week to get the agreement through the Congress before a possible June the 5th default. But there are also some like environmentalists, defense hawks, and conservative hardliners who condemn the concessions. So what do you make of the current development and what does this deal also mean for the financial markets?
Yeah, I don't think the market has put enough emphasis on the crisis that the deal might not be voted into action. And I think if you look at the 1-year US CDS, it is still at about 120 bips. It's not really that high in absolute value, but compared to 08, compared to 11, compared to 13, we can find out that back then, the US 1-year CDS is about 60 bips, and then in 2011, 2013, about 80 bips. But right now we're at highest we've reached is about 147. Right now we're at 120, which is not that low because back then 2 weeks ago when McCarthy and Biden sat down and said they made progress, that CDS, 1-year CDS, actually dropped back to 120, exactly where we were yesterday. So I don't think the market is really believing that there is a deal that's going to be voted into execution within this week. And I don't think there are a lot of hopes going on. But at the same time, we don't see a lot of negative reaction in the equity market. We see a lot of reaction in the CDS market and in the fixed income market and in the money market market, but not really in the equity market because everybody can look at the indexes in the United States and tell that it hasn't been really moving that much, even though we already had a second straight quarter of earning decline. Right now, we're officially in an earning recession for the U.S. equities, but the market doesn't really respond negatively to that news. And all we care about now is the fourth industrial revolution by the name of ChatGPT and generative AI. And because of those tech companies, I think a lot of people are overshadowed by
optimistic?
Yeah. I think they are not really putting the CDS market or the debt market. But for example, if we're looking at the U.S. Treasury bills, there are kinks throughout the maturities that is going to be reached within 1 week. And those kinks are extra risk premiums for investors to demand because of this debt ceiling thing. So the equity market is really have been reacted benignly in light of this event. I think there could be some surprises, negative surprises for equities.
So you don't think that we're going to reach, see the deals being approved by the end of the...
Well, think about it, McCarthy is... Well, think about how many rounds of votes that he needs to get to be the Speaker of the House. And then we don't regard him as a strong leader for the Republicans. We see him as the only option for the Republican leader. That makes him kind of weak. So that's probably why the Republicans can reach a compromise with the Democrats because Biden is strong, even though he's old. Yeah, I think McCarthy is going to have a hard time talking to the hardliner Republicans that you were referring to before, persuade them into signing this deal. Yeah.
But nonetheless, it seems that we at least have some possible steps forward or frameworks to go forward as well. Then what do you think the interest rates development will also be impacted by the latest developments?
Yeah, there are a lot of changes in interest rate expectations. If we were to look back at about 2 weeks ago, there is a 60% chance that June's rate hike will be paused. And then if we look at the rate expectations today, it's a 80%, it's a 60% chances that there will be a 25 bips rate hike. So on one hand, you see Jay Powell coming out and say that because of the tightening financial conditions, that there is no more or not that much need for him to hike rates anymore. But on the other hand, you can see the usual hawks, the Kashkari James Buller coming out and say, especially James Buller, saying that the rates could be higher than 6% in his view. So I think they are really between a rock and a hard place, because right now we've seen a pattern emerging from U.S. economic figures. Top line headline numbers are dropping, but price elements are rising. Taking example of the initial jobless claims, there are more people applying for initial jobless claims, but unit labor costs are rising. Then the manufacturing PMI, there are less new orders, but the order price is also rising. And taking GDP, for example, GDP is growing at 1.1% per year. That's not nearly as high as a 10-year average. But at the same time, durable goods price is on the rise again. It's increasing by 3.2% on an annual basis. So I think the most common outcome that the United States is going to be facing is a slowing down economy and a sticky inflation situation, which translates into a stagflation.
Still kind of many of the contradictory aspects in the US economy that we're seeing as well. And speaking of the AI sector jump, earlier this week, Nvidia's CEO James Wong unveiled a new batch of products and services tied to artificial intelligence, looking to capitalize on the frenzy that has made his company the world's most valuable chip maker. And we've seen the company stocks rallied and rocketed. How would you rate this current performance? I mean, we have this kind of re-emergent AI interests in different companies as well. And we earlier also see the ChatGPT, also Baidu, they are rolling out their own ChatGPT, their own version of ChatGPT. Yeah. What do you make of this AI sector boom? Do you think there's some sort of overreaction or hype around this sector? Because earlier that we also see, for example, from NFT last year, it also seemed to have gone through the similar patterns, a rather big jump and downturn as well.
Yeah, I don't think this is anywhere near where bear any resemblance with NFT or metaverse, because this is the real deal. I think this is going to be huge. Like I said, it's going to be the fourth industrial revolution, because it's really affecting people's productivity. And so if we look at NFTs, that's barely just an instrument of investments or instruments of crypto investments compared with the CTOs, compared with initially the Bitcoin and the Ethereum. Metaverse had us confused for a little while, because we've seen its capability of connecting the real world and the virtual world using a medium, and that medium is the cryptocurrency. Now, we thought at one point that it could be big, but after we
But it's based on the blockchain, isn't it? Like, yeah, that is a big thing.
It is. We thought it could be big because we've seen people are starting to buy lands, virtual lands on Decentraland and sorts, and we think, okay, companies are really started investing in this kind of activities. And then we've seen Decentraland publicizing its first beta run of its virtual lands. And we were like, is that it? It's not really that advanced. And then we start to realize that the technological barrier for metaverse to really start to make a material impact in people's life is going to probably take another 10 years. So says Zuckerberg from Facebook. So that metaverse might potentially still be a big thing, but just not right now. And ChatGPT, I think the equity market reaction starts, I think, in early February this year. Back then, there was a company called BuzzFeed, and there was news about BuzzFeed hiring or enlisting generative AI, ChatGPT-4, to do its script writing. And BuzzFeed's stock price skyrocketed by about 50% in a single night. Then there were different smaller ChatGPT related companies. Each of them probably enjoyed a ride of 200 or 300% of stock price increase. But then back then we already thought this could not last. And a lot of those smaller ChatGPT related stocks started to see a downfall. But now we've seen Microsoft taking the lead in the generative AI application field, and we've seen Nvidia raising its value increased by 100 times in the past 10 years. AMD doesn't even come close to that. AMD is about 30 times in the past 10 years. But right now, if we're looking at the market cap of Nvidia, it basically says that by 2030, AI is going to replace all of us human labor.
But do you think it's true?
Yeah, that seems a little unrealistic to me. So yeah, I think the generative AI is going to be a big thing, but I'm having a hard time justifying the valuation for Nvidia.
Do you think there's overvaluation then for the AI sector or for the Nvidia?
Well, if it's really a fourth revolution, industrial revolution, I think there are still room for generative AI stocks to go. But for this wave to reach this high, I think, yeah, it's a bit overvalued.
And if we consider about the fact that AI is not really something that new, we've had the artificial intelligence over the past years as well. It's just now it's getting smarter.
Yeah, the point is it's constantly learning to adopt to new measures. And we've actually worked with some quant shops adopting an AI that is optimizing other AI algorithms. So that's a new thing to us. And apparently the AI itself is learning this new trick by itself. The results right now is not that ideal, but I think given it's enough data and time, it's going to develop into something new. And the real impact to people's lives or to companies' lives, life cycles, is that it can really reduce human labor, and it could increase human labor's productivity by a high notch. So that's what we think it's really about.
Efficiency.
Yes.
So thank you very much for your thoughts, James. We'll take a short break for now, but coming up next, we'll have more discussions over the latest market trends as well as outlook. So don't go away. Welcome back to All About Money on HK-IBC. I'm Chloe Fong. Still with us today is Mr. James Wong, the Chief Executive of Cathaysia Securities, who will share his thoughts over the latest market trends as well as outlook. So James, thank you for joining us. And earlier we have talked about the AI sector and also the Biden-McCarthy deal in the US and also the US economy. Now I also want to get your thoughts over another big focus on the valuation possibilities for Alibaba.
Yep.
And Alibaba's cloud division is now downsizing its staff. Not a good signal, but it's also preparing for its planned IPO in the next 12 months, with its valuation estimated at $31 billion and its chief executive, Daniel Zhang, also hopes that the cloud division will grow as big as Alibaba Group. Are you in the same line with him? Are you optimistic about these growth possibilities?
Yeah, I hope so too. But first of all, to have the cloud division listed in Hong Kong in less than 12 months is a long shot. I mean, I don't even see their A1 prospectus yet. And I think Alibaba is taking this division thing actually kind of slow. It's not really like JD. I think they should learn from JD a little bit, because JD, when they try to spin off different sections, they, for example, JD Health, JD Logistics, and now JD Industrials, what they do is they basically do not go through a lot of rounds of financing sections. So they have a minimal participation from PE funds, and if there are any PE funds that participate in the pre-IPO rounds of financing, it's usually the big names, the only names that you can think of in the PE field. And then, for example, so the P for JD Industrials that is going to be listed, I think, within this year. That's more hopeful and more practical. that company just went through one round of financing. And within the financiers and investors, you can see all of them being prominent names in the industry. And then within the second round of the financing came actually 5 days ahead of the news that they're applying for an IPO in Hong Kong. So that translates into a message to all these potential investors, PE investors, that if I get you into this deal, you're going to have an exit in less than 12 months. So that's a very good message for all these PE investors. And the thing that JD is adopting is that they don't really want the valuation of the spin-off companies to be high before they go public. But right now we're seeing Alibaba trying to have additional rounds of financing before the cloud division got spin off. So that's probably they want to pump up the valuation of that cloud division, and that's really not that a good thing. What we are really expecting from the spin-off frenzy is only one company, Cainiao. This company is one of the two logistic giants or delivery giants in China. All the smaller ones, medium players, are either acquired by that or having entered into a affiliation with that. So, and it's only valued at about what, 20 billion USD right now. It's not expensive. If Alibaba adopted JD's practice and make Cainiao available for an IPO in a short period of time, I'm pretty sure it's going to cause a lot of excitement in the market. But right now, if they're trying to wait and trying to have other rounds of financing to pump up the valuation, by the time that it got listed, I don't know how much the valuation is going to be. It's probably going to be $40 billion. It's probably going to be $60 billion. So that appears less attractive compared to what it is valued now. So what my suggestion to Alibaba is to have it done quick. Just don't wait. You don't really know what's going to happen in 12 months. And by now, if we don't see a A1 prospectus, I don't even know if the cloud division could be listed in 12 months.
Its shares have already go down maybe by 1/4 of its original valuations that we've seen in the peak. And many investors are still holding their money into these big giants. Yeah, but what is your view over the restructuring overall? Do you think this plan, this rather bold move, will actually boost these companies' growth in the long term, or actually do the opposite? What's your view on that?
No, I think spin-off is a good thing. Yeah, it helps to release the valuations that it's been hidden before, or reveal the valuation that's been hidden before. And I see Alibaba, same as Tencent, as a conglomerate of investment companies. So in terms of valuation being seen by investors, I think spin-off is a good thing.
Do you think its shares, the prices, will still go up in the long term? Are you still holding optimism on this?
I am pretty optimistic about all the earnings that we've seen for the last 2 quarters of all these tech giants. They're not that bad, but what's bad is the market sentiment on them. So I think they still have, their role has changed. They are not really a growth companies anymore. They are blue chip companies, because we've all seen their top line growing on a year-to-year basis 5% or less. But still, I think these are solid companies, and I think some of them still have potentials to take benefits from the fourth industrial revolution. But again, it's a long shot.
But speaking of the overall tech sector, do you think the expansion is a bit too aggressive in a way? Do you think this will do the markets good, or like in the long term as well? Because if we look at the tech sector in the US, they expanded rather aggressively during the COVID time, and now they hired a lot of staff, and now they're cutting back the staff.
Yeah.
So what do you think about these kind of like bubbles, these kind of cycles as well?
Yeah, I think the only reason that we've seen the U.S. tech sector probably is the second best sector for the past earnings season is because they cut cost. Their top lines, none of their top lines, a few of them are satisfactory, but a lot of them, including Nvidia, is seeing a year-on-year decline on their top line. And their bottom line managed to give us an increase is only the result of cost cutting, and that translates into cutting a lot of manpower. But again, for example, Facebook and Google, they cut the research department by a lot during the last 2 quarters of the last year. But then right now they're hiring again because they want to develop their own generative AI practice. I think this is probably going to repeat on the Chinese tech giants later this year as well.
All right. And what are the other sectors that you're looking into for now? For example, EVs is also on a booming trend. And what about the healthcare sector now with the population trend change as well? We're seeing the more aging societies.
Yeah, EV we're not into anymore. EV is probably an idea of 2021, and we've seen blue ocean turn into a red ocean, and there is fierce competition, price cuts, and a lot of the EV new participants do not actually have the technical know-how to manufacturing a car. So what they practice is what we call internet cognition. They really just to burn money so to a point that they hope their competitors back out. But this doesn't seem to work for the past year. And we've seen the numbers out of the new EV companies, they're not pretty. And the only thing that I think two EV companies, one in the States, one in China, that we are still holding is BYD and Tesla. Yeah, so these are the two that have enough money, have the whole value chain processed, and have enough strategy to survive this EV battlefield. I don't think it's going to be easy for the rest of them.
And what is your view over the Chinese and Hong Kong equities outlook in this year? Would you expect the Chinese authorities will, for example, roll out more stimulus measures to boost economies as well? Now that we are seeing some serious debt issues, right? Because some Chinese private businesses are struggling with the resurgence of the so-called triangular debt. What do you think about the outlook?
The outlook should be better in the second half of the year. And right now, I think the PBOC is having a dilemma. If it were to push out a series of stimulus plans, especially monetary policy-wise, it's going to devalue the yuan, which we've already seen the yuan being devalued, and is now lower than 7 for 13 consecutive days. And so that kind of reminds us of what happened during the last quarter, between last August and last November, when yuan actually breached into the level of 7.3. That's a really bad thing for the sentiment, not necessarily for the economy, but for the sentiment. Yeah. And PBOC made it pretty clear that there will be no imminent intervention. I think they made this statement on May 19th. But the thing is, even if they were to intervene, I don't think the yuan shorts really cares, because if we look at last August, that's when the PBOC first started to intervene the yuan market. They bought USD in exchange of RMB in the futures market, and then they sold those USD in exchange of RMB in the spot market. And then they issued more offshore debts, RMB debts, and they reduced the RRR for Forex for Chinese banks. But none of these really works. I mean, at the risk of being presumptuous and drawing cultural relationships, none of these works. So I think what really matters for the yuan is the economic outlook. But right now, I think people are disappointed. But I think China is taking its time to stage its comeback. It might not be what Michael Scott's interpretation on Britney Spears' comeback, but it's kind of like Robert Downey Jr. So after Robert Downey Jr. got clean, he did a few mundane or normal films before Iron Man really hits the screen. So I think China is taking its time.
All right. Thank you very much for your thoughts today, James. That's James Wong, the Chief Executive of Cathaysia Securities. And thank you for watching All About Money. We'll be back next Sunday night at 8:30 p.m. So until the next time, please have a good evening.